Hello, thanks for joining us on this Wednesday, and welcome to this educational presentation. Now, today I'd like to talk to you about short-term trading with quick results. Now, most of you, I'm sure, are probably saying to yourself, well, Steve, I'm not really a short-term trader. I'm more an investor, or perhaps you're a swing trader. But when people think of short-term trading, they think of day trading or trading tick charts or things of that nature. Well, that's not necessarily true. I'd like to share with you what my mentors taught me some 4 decades ago. Here's what they said to me. They said, Steve, being out of sync with the short-term trend will often result in losing trades. I know we're always taught to be in sync with the trend, but we don't really think of it as the short-term trend. We think about the overall trend. But the short-term trend can be just as difficult and just as detrimental. Let me share with you a chart here. This is an SBAC. Now, looking at this past, let's see, it's 6 or 7 days. Let's say someone would look at this and say, well, I took that $10,000 course on the institutions and on support and resistance, and I think that there's institutional support right there. According to the indicators and everything I was taught, this is where the institutions, the big banks are buying, so this is where I want to buy, right? So you don't want to buck the big money, so you decide to buy right here. And then this happens, right? You say to yourself, wow, what happened to the support? What happened to all those big buyers? Well, I guess it didn't work out. So for all intents and purposes now, the trend is now down. So I'm either going to be, lick my wounds and take this loss, or I'm going to be more aggressive and short the market. So you decide to go the opposite direction, and then this happens, right? So see, you may think that you're trading in sync with the trend by following the institutions or maybe the earnings reports, or maybe what's going on worldly, but in all actuality, you're really out of sync with that short-term trend. So you're buying when you should be selling and selling when you should be buying. What if there were a strategy that was really designed to put you in sync with that short-term trend? Well, there actually is. I want to be talking to you about it today, because this strategy actually would have generated, on the same day that you wanted to buy, it actually generated a sell signal that could have potentially captured 70 points. And then when the market went up and kind of just hovered sideways, it was actually generating a cluster of buy signals right here prior to a potential 45-point gain. So this is what I want to be talking to you about today, short-term methods with quick gains. And you're going to see how simple it is to apply this on our platform. This is the PTS Primo charting platform. I designed this with ProTrader strategies specifically to teach you how to identify and trade short-term signals. So this is going to be a great educational presentation today. Welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading for a total of 43 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. Now, if you're not familiar with what a specialist is, there aren't that many around anymore since the markets have pretty much gone to the point of being electronic. But some 40 years ago, when you wanted to trade, you would call up your stockbroker on the phone. The stockbroker, in turn, would contact, either through phone or through wire, contact the floor broker, who would get the order you wanted, let's say buy 100 shares of IBM. He, in turn, would walk up to the trader who specialized in making a market in that particular stock. So if you wanted to buy or sell a particular issue, you had to go up to the trader who specialized in making a market. That's where you get the name specialist. I was a specialist in about 50 or 60 stocks. I was a specialist for 9 years. I traded through the crash of '87. I made markets during that crash and then the bull market that followed. So I've traded straight up markets, straight down markets, sideways markets, any strategy, any system, any great new technique that you've probably paid thousands of dollars for. It's been around already. Trust me, I've traded it. I've seen it. It's just probably been renamed or rebranded. So in all the environments I've traded, all the methods, in my 4 decades of trading, I know what works in terms of consistency, and I know what doesn't. So why waste your hard-earned money and your time searching for that holy grail when it really does exist, but it's right here. It's education, because we provide you with the education on things that actually work. And then we let you make your own decisions. That's our philosophy at Specialist Trading. See, we're not the kind of company where you say, well, listen, I'll pay my money, I'll subscribe, or I'll become a member of this course, and then every day you tell me what to buy or sell, right? If you've come here thinking that that's what I'm going to do, you've come to the wrong place, because we don't believe in that. In fact, we think that that's at the core of all the traders' losses. That's really at the root of all your losses because you're taking yourself out of the game. Think of how you make your own trading decisions. Now, it doesn't have to be some course you took or some guy in a chat room. It could be earnings reports. You could be afraid to make a decision until that earnings comes out, right? Those earnings come out. Or maybe it's the jobless claims or the unemployment or something, some indicator or some announcement you're waiting to find out, right? Earnings, right? I hear the earnings are coming out late. Well, believe it or not, you're still waiting for something to give you the green light whether to buy or sell. And that really is a recipe for disaster. You should be making your own trading decisions. In my 43 years of trading, in my experience, that is the only thing that makes one a consistent trader. Not by blindly going to a chat room and listening to what this guy is doing or listening to some guy on TV or listening to the institutions or some convoluted indicator that works off volume. Trust me, once again, I've been around for over 4 decades now. I know what works and what doesn't, and none of those things have high levels of consistency. The only thing that will make you a consistent trader is being taught the things that actually work and then making your own decisions, not relying on someone to tell you what to do. So that's the service we provide at Specialist Trading. You'll see the attention to detail we give to actually teaching you in today's class. Now, before we begin, as always, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this fairly new method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, if you're looking for some more education once this presentation has concluded, you can go to our Twitter page. And I don't have the slide there, but our Twitter handle is at SPCLSTTRADG. I'll give that to you again. You can simply Google it or look for our Twitter, but there's a lot of great free information on a daily basis, okay? Now, remember, if you've come here thinking today that I'm going to tell you what to buy or sell as soon as this presentation is concluded, you've really come to the wrong place. My goal here is to teach you how to trade. After all, a good mentor does not trade for his students. He actually teaches you how to trade, works with you, stays there alongside with you, but ultimately teaches you so that you can make your own trading decisions. And this brings me to another point. Think of where we are right now. It's really phenomenal where we are with the social distancing and everyone having to be at home right now. I know a lot of people are complaining or looking at it as it's a deterrent to wanting to do what you want to do, either work. But if you're interested in trading, or if you have been trading, this is actually an amazing gift that you've been given, because while everyone is out of work or struggling to make ends meet, you have a gift now to actually learn. Take this time to learn and to be educated. Someone who's been trading for over 4 decades that can help you to become a consistent trader. This is what we do at Specialist Trading and at my sister site, Pro Trader Strategies. I teamed up with Pro Trader Strategies to bring you this education in the form of online courses and in online classes. So this is really, rather than looking at this as something negative, this is something positive. You have all this time right now at home to study and to really dig down and really be disciplined and learn, so that when things do finally turn around, when the markets do settle down a little bit, or maybe when you've learned enough and you feel confident, you'll be that much more ahead of the game. So don't look at this current environment, the situation, as something negative. Look at it as a positive advantage. Here's the time that you have to be on your computer, which I'm sure most of you are on computer 24/7 now anyway, but to really be studying and to take your trading to the next level. The good news is this is what we provide. We provide you with all of this education and this insight that I've accumulated in 43 years, okay? All right, so since this is going to be a class today, I want you to ask me as many questions as possible, but if you see in the chat box right underneath that, remember, questions will be answered at the very end of the presentation. So please write them down or try to remember them. I often tell my students many times, if you wait for the next slide, your question will be answered, okay? So please wait till the end of class. Now, if you're having technical difficulties such as audio or visual, oftentimes it's your own internet connection. So oftentimes if you log off and then log on again, everything's fine. Now, I know last week we had some really difficult problems with GoToWebinar, and a lot of people weren't seeing or hearing everything, so I had to start the presentation all over. So just to make sure I don't want to have to do that again, if you can go to your question and answer box and just type in yes or no if you're having technical issues, if If you're not, just say everything's clear or whatever, or let me know what the issues are. But remember, oftentimes it's your own internet connection, and all you have to do is log off and then log back on, okay? I see a lot of people are saying it's clear. They see and hear everything clearly. Great, because once again, last week I think I spoke for about a good 15 to 20 minutes until I really found out that not everyone could hear or see it clearly. So I just want to make sure, because I have a lot of great information today, and I just want to make sure I'm sharing that with you. All right, sounds great. Everyone's coming through loud and clear. Why don't we begin today's presentation? Now, let's start off by sharing with you strategy number 10. This is the strategy I'm talking about. It's a fairly new strategy. It's only about 3 or so months old. We just started this at the beginning of last year, and we're already into month 4. But for all intents and purposes, people really didn't come on board until the beginning of the year. So it's a fairly new strategy, and it's already racked up some tremendous gains, even in these volatile markets. Now, let's share with you some of the highlights for this particular method. It's our short-term strategy. Now, I know before a lot of you get turned off or say, well, wait a minute, Steve, I'm not a short-term trader. The reason why we call it short-term is because unlike our other strategies that we have at specialist trading, all of the requirements, all of the rules are based off of short-term requirements and of short-term format. That's why we call it short-term. If you want to stay in the trade for weeks or months, you can do that. But the basis for this is it's formatted off of short-term requirements. That's why we call it short-term. For example, if you're a student of mine, or if you've taken some of my courses before, or even gone to my free webinars, you've heard the importance of the buy-sell line. That's the 50-period moving average. I've often talked about how important that tool is, and that the reason why we call it the buy-sell line is because it tells you whether you should be buying or selling in accordance with the overall trend. Well, guess what? Strategy number 10 doesn't use that. In fact, it's one of the only strategies we have excuse me, that doesn't apply the buy-sell line. So then I'm sure you're asking, well, then how do you know the overall trend? How do you know the trend? Well, we use our Pet Dee tool. This is our short-term trend translator. This is the best thing I know for determining the short-term trend. Now, the requirements are based off of an indicator and a pattern recognition combination. Usually when we've had a strategy before in the past, it's totally indicator-based or totally pattern recognition based. But now we're combining a pattern with a particular indicator, okay? So this is unique as well. Now, this particular strategy is designed to trade quick bars from either 1 to 5 bars, okay? That's why we call it a short-term method, because it's based off of short-term requirements. But you'll see in examples, if you don't like to trade for the short term, you'll see examples, or you could stand the trade weeks or even months if you like. Now, because of this quickness of the trade, it makes it unique to apply to option trading. If you're an option trader, this is a great strategy to trade. Here's another advantage of this. Now, it's not mentioned below, but usually in our strategies, we use what's called our top-bottom 25% indicator. This means that for a strategy, for all the rules to come into play, the setup bar must close for a buy signal in the top portion of its range, or for a sell signal in the bottom portion of its range. Once again, strategy number 10 is unique in that it doesn't require that rule. So you can get a buy signal when a daily bar actually closes on or near its low. This makes it perfect for option trading because as an option trader, you'll know that the premium, the cost of the premium has really decreased, and you'll pick up some inexpensive options if you like. So that's another added advantage. Now we have an aggressive as well as a conservative version for trading this. So there's different ways in which to trade it. Here's another advantage of this. We know that there are a lot of not only just traders, but investors in some of our courses. These are people who like to hold positions for the long term, not just months, but maybe years. Well, this is a great way to offset your long-term investments. Most long-term investments are long, meaning that they have positions, they're holding positions. Now, we all know this last couple of months that the value of those positions has most likely dwindled tremendously, cut in half. So this would be a great way to offset that. So if you're holding on to long positions for the long term, here's a great method maybe to apply options to buy some puts or some spread strategies with a negative bias, a downward bias, to offset that, at least to hedge your long-term positions, okay? Now lastly, the specialist edge is consistency. Consistency unfortunately, many people think consistency means, well, this must have a lot of winners. Well, sure, it does have a fairly good sized amount of winners, even though we don't back test anything. Our members who are currently students of the Strategy 10 course say it works very well. But that's not what consistency means. Consistency means that you are aware. It's an awareness of losses, that you will have losses from time to time, and that's perfectly admissible. What a consistent method is a method that's able to recoup those losses. You see, you don't want a method that promises the world, and sure, maybe has 1 or 2 great home runs, and you're thinking, boy, this is great, I'm going to retire in 6 months, and then the very next trade gives it all back, right? I'm sure you've all been there before, right? Maybe you're currently trading that way. That's not a consistent method. A consistent method focuses on these small, short singles. Instead of looking for the home runs, it looks for these singles, and it knows that every once in a while it will have a losing trade every once in a while. You will strike out. But you want a 2-step forward, 1-step back approach, an ability to make back and recoup those losses sooner than later. This is consistency. And in my opinion, consistency, not looking and swinging for the fences and hitting home runs, but consistency is what will sustain you. Now, sure, every once in a while, and you'll see in some examples today, you will have a home run, and that's great, but that's not what we're looking for. We're just looking for a consistency on our trading. Consistency is what has sustained me for now 43 years, not some method that hits home runs every time I trade. What I'm looking for is consistency, because consistency will allow you to trade another day. All right? So what kind of a mentor would I be if I, gave you some high trading method that was, supposed to promise the world, and sure, maybe hit a home run every once in a while, but then lost it all for you? What type of a teacher, what kind of an instructor would that be? I would just be taking the money and run. That's not what I want to do. I want you to be trading not just a couple of months or a couple of years, but a couple of decades, 20, 30, 40 years down the road. All right, that's our goal. All right, so let's look at the process. Firstly, we're going to outline it, and then we'll show you the process in some actual trade examples, okay? Here's the short-term setup process. And once again, this is probably one of our most simplest methods today. Why? Because it only has 2 rules. That's how simple it is. So unfortunately, I can't really divulge the rules other than give you one of the indicators which makes up this process, okay? All right, the first thing I want to do is share with you how we define the trend, because remember, we're not going to define this with the 50-period moving average. So we want to apply the Pet Dee to determine the short-term trend. Now, someone would say, well, what is the Pet Dee? Or if you've heard me give webinars about the Pet Dee before, you would say, well, why the Pet Dee? Well, let me share with you this example here, all right? Most traders looking at this would decide probably around this area that we're in an uptrend. And right when they get in or decide that they want to be a buyer, then this happens, right? Well, let me share with you what the Pet Dee does, because the Pet Dee is a short-term trend identifier. But more than that, it's really a translator. It translates on a tick-by-tick basis what the market wants to do. It doesn't generate signals. It doesn't tell you how high or how low something will go. It simply translates what the market wants to do. Now, we've defined it by making it into a color bar algorithm. This is what Pro Trader Strategies and I developed. And so all you have to do is click on the Pet Dee tab, and it colors the bars. If you see a series of green bars, you're in a short-term uptrend. A series of red bars, you're in a short-term downtrend. So as it says here, in my over 4 decades of trading, the Pet Dee is the best tool I have found for capturing the short term. And why is that? Because it's translating to me what it wants to do. I mean, that's why so many traders lose, because they're viewing the market as if it's a different animal. All right? They don't understand what it's doing. They think it's based off news. They think it's based off institutions. They think it's based off earnings, when it really isn't. It's just based off a flow, an ebb and flow of what all these people are inputting and taking out of the market on a tick-by-tick basis. So we need something to translate for us as to what it really wants to do, and that's what the Pet Dee does. So that's going to determine what the trend is. Now, here's the process for determining the signals. If we want to be a buyer, the method identifies a shallow pullback. Now, a shallow pullback means it's a 1 to 3 day sell-off in a short-term uptrend. So this means a 1 to 3 day sell-off with the signal bar being green, because you're in an uptrend, right? Now, let's say you're a seller or you're looking for a sell signal. Well, first of all, the Pet Dee must be red on that signal bar, and the method identifies a shallow pullback. This is a 1 to 3 day bounce in a short-term downtrend. once again, because there are only 2 rules, I can't divulge them. I apologize, but let me show you the process now looking at an actual chart. In fact, this is the chart we first looked at, strategy number 10, process in action. This is SBAC. Remember, we opened up the presentation and said, okay, here's the institutional support, right? Well, you took that class, and according to all the rules and everything, this is where the institutions are buying. So you can't buck the institutions. They've got too much money and they're always right? Well, trust me, I traded with the institutions on the floor of the exchange some 4 decades ago, and they have no higher level of consistency than a moving crossover strategy. They would enter an order and the next day they would cancel the order. So why would you think there's support when they're not even in the book anymore? So they used to give me their orders. Stocks I used to trade, IBM, US Air, Waste Management, I used to trade with them all the time. So, from my experience, I would not place my faith in any institutional type of method, okay? And we can see this right here, because let's say you wanted to buy, and what happens to the institutions, okay? They most likely cancel their order. So why would I even want to rely on any institutional support? It just doesn't exist. There's no consistency in that, all right? So how could this tool have helped us? Well, the first thing we want to do is apply the Pet Dee. And on our platform, which makes this method simple, you simply click on the Pet Dee in the upper green strategy tab right here, and it automatically changes the colors, as you can see. Now, look at our buy signal. How is the color of the bar colored above that buy signal? It's outlined red, right? That's meaning that the translator, the Pet Dee, is telling you the trend is down, the short-term trend is down. Now, obviously, the majority of these bars are colored or outlined red. We only have one green bar here. But all we're concerned about is the signal bar. That's the bar above where we're going to be buying, all right? So why would you want to swim upstream? When the market is telling you it wants to go lower, why would you be a buyer? Why would you fight it? Wouldn't it be better if you went in sync? But how do you get in sync with that? What are the what is the method that generates a buy signal? Well, in the course, we teach you exactly what to look for. This is not a black box. It's not something. In fact, we don't want you simply to say, well, tell me where to buy or where to sell. We teach you exactly what to look for. But we develop the platform so that you could check your work. So let's say that you think you've identified a sell signal here after taking the course. The way to check your work is you would simply not buy, but you would click on strategy number 10, and you have an idea of where you think the sell signal is. But when strategy number 10 appears in the drop-down window, you'll just click on arrows. And guess what? You're right. There was a sell signal generated on that same day that most traders thought you should be buying, according to some institutional support. But if you had been a seller, you had been in sync with the short-term trend and potentially could have captured 70 points. All right? Now, at this point, most traders would say, well, we're in a clear-cut downtrend. I guess the institutions are no longer buying. I guess that, there's a lot of selling. Maybe there were some bad earnings in that, or I guess the economic numbers are really causing this stock to go down. So just when you get negative, this happens, right? Well, look what happened with the Pet Dee. The Pet Dee still remained red, and then the majority of the bars are green. Now, going back to your studies, your online course that we teach you, you know what to look for. We don't simply want you to click on strategy number 10 and find out where the signals are. We want you to look and find on your own, so that one day when you're not in front of a computer, you can see and say, hey, that's a strategy number 9 buy or 10 buy signal, okay? So you think you found a couple of signals. Now you just click it on to check your work, and guess what? You're right. There's actually 3 buy signals on the 27th, 31st, and the 3rd of April. So you could have taken advantage of any one of these. Remember, all we're looking for is the bar above the arrow to be colored green. When we were going short, the bar below the arrow should be outlined red. And look what happened. 45 points potentially you could have captured. Now, I know a lot of you are saying, well, did I make 45 points? Would I have made 70 points? Well, it's up to you. Remember, we're not telling you how to trade. We're teaching you how to trade. So in our course, we have upwards of 7 different entry points. We have upwards of 7 different exit points. And we have upwards of 6 or 7 different stop placements. So depending on what type of trader you are, it's up to you to make that decisions. Now, everyone is going to get, the signal is going to be generated at the same place. But how you enter, how you exit, how you protect your trade is up to you. This is how you become consistent. Not by coming to our website and having me tell you exactly what to do. I mean, say you want to learn how to swim. I can teach you how to swim because you want to be in a race or some competition, but I can't race for you. I can't swim for you. You've got to do that. It's the same way with trading. I can't be there making your decisions for you, and I shouldn't be making the decisions for you. No more than you should be making the decision if you fly on an airplane or an airliner, you should be making the decision on how the pilot should be landing. You never hear a pilot ask you, how should I land this? But you hear traders all the time saying, how should I trade this? What should I do? You should have to learn how to trade like a professional. A professional never asks anyone or never goes anywhere to a website or looks at TV and wonders, what should I do? I wonder if they have a good idea. Professionals don't do that because they already know what to do. My goal is to make you into a professional trader. All right, so let's look at some strategy number 10 signals within the last few months, okay? Roughly about the end of February to, or maybe mid-February to coming into this past week or so, all right? And then remember, if you joined us late, we'll stop for questions at the very end, all right? Okay, so let's start out. This is in CHKP. This was just like a week or so ago in April. It looks like the stock is basically going sideways. Someone here would say, well, Steve, there's no trend. But the strategy generated 2 buy signals, one on the first and one on the third. 10 points in roughly about 4 days, okay? Not a bad little quick trade. Let's look at this example in LRCX. This is going back to February. Now, a buy signal was generated. Now, remember, we have the majority of bars green here, but all we need is for the bar to be green that is above the arrow. That's all that's needed. Now, it made a quick 25 points in the next week. Had you decided to get out prior to that, well, that's a nice quick trade. But let's say you wanted to stay in longer. Well, most likely would have broken even. We teach our students that after they get a nice profit to move their stop to unchanged. So you most likely would have broken even. And then this happens. Well, most traders will say, boy, I broke even. I had a nice profit. I didn't make any money. And now I keep trying to buy it back to make some more money. But look at the Pet Dee. The majority of the bars are red. And so once we see the red bars, we just want to see if the rules have been attached to that for sell signals. And look at all the sell signals going forward into the middle of March. You could have potentially captured 110 points. So if you missed that first buy signal that captured 25 points, you could have potentially captured 110 coming into the mid to end of March. About XLNX, all right? 3 buy signals generated in the middle to end of March, all the way coming into the first week of April, just a week or so ago. Potentially captured 12 points, okay? Excuse me, not a bad little trade here, but look at this signal. This was at the end of March, and once again, the beginning of April. This was in ZTS. Looks as if the stock is just going nowhere, going sideways. If you notice, this is what we mean by short term. You had 2 or 3 up days and 1 down day. Now, just because you have 1 down day does not mean that that will be a buy signal, but that's just the short-term pullback we're looking for, and the requirements are met with another indicator and looking at the pattern. So just off those 2 little rules here, we have a buy signal. Now, nothing much really happened within the next week, but another signal was generated, and this is where the stock went up 20 points in about 4 or 5 days. So sometimes it takes a little longer. Here you had to wait a week and nothing much happened, but you wouldn't have been stopped out. Here, in the next 4 days, you could have made quick 20 points. Let's look at ROST. Now, this is a perfect example of what we mean by consistency. Remember, consistency does not mean that, oh, I guess this makes a ton of profitable trades. No, consistency means 2 steps forward, 1 step back. The 1 step back is in the form of losses. For example, on the 21st and the 24th of March, it's about a month or so ago, there was 2 buy signals in ROST that obviously turned out to be losers. All right, most likely you would have lost, just using one of our generic stops, roughly about 5 points, okay? Now this is where traders go into the victim mode. They say, gosh, I spent this money and this stuff doesn't work. There's another guy trying to rip me off. None of this stuff works. But you have to be diligent. You can't just, go sulk in the corner. You have to continue to trade, because if you had done that, well, you would have missed a sell signal just about 3 days later that could have potentially made back that 5 points and then another 55 points, okay? So this is what we mean by consistency. Consistency is a 2-step forward, 1 step back process. There's absolutely nothing wrong with losing trades, okay? I had a losing trade the other day, and by the end of the day, I had made it all back and some more. So that's fine. That's what you need to become a consistent trader. That's what you need to sustain you to be trading for decades. If you're looking to hit home runs, that's great. But it's been my experience that that won't sustain you. You'll have maybe a good month or two, maybe you have a good year, but most likely, it's been my experience, you'll give it all back. Okay, HTH, another example of consistency. A buy signal was generated just about a week ago on the 1st, a week or so, and it went sideways to lower. So most likely, if you used a conservative stop, you would have gotten out with a quick 7-point loss in 2 days. Don't sulk, because guess what? The day you got stopped out, or day after that, a sell signal was generated that could have made potentially 35 points. So you could have made back that 7 points and upwards of 25 or more points after that if you stuck in there for the next couple of days. So this is what we mean by consistency. Don't get discouraged. Don't turn into the typical victim role that most traders like to play when they have a losing trade. Stay diligent and stay focused so that you won't miss the trade that oftentimes can recoup what you just lost. All right, example in VRTX. This was at the end of March, a couple of weeks ago. Really can't tell much. We have a series of red bars, a couple of greens. So someone would say, well, Steve, I thought all the bars had to be green. Remember, for this short-term method, all that needs to be green is the bar that is above the arrow. The arrow says that the pattern and the other indicator that are applied have come together and they've met the requirements. Now, the Pet Dee just confirms that it's in sync with that signal. So if you get a buy signal, the Pet Dee has to confirm it that that bar is green. And as you can see, it is. Here's the one-day pullback. We closed up and then sold off. That's all we need for this short-term trade. And VRTX went 50 points in the next week or so. Not a bad little trade, right? And if you missed that trade on the 27th, there were 2 more generated in April. Here's an example, once again, of when the market shifts gears, you can shift with it. This is the beauty of short-term trading, all right? Remember, when we say short-term trading, we don't mean that you're in and out in a matter of hours. You can do that if you'd like. Short-term trading, in this sense, just simply means that all the requirements are based off of short-term tools. They're not designed to have you wait for a signal to be generated based off of overall trending methods. We can find out very quickly, just off a one-day bounce, as we did here at the beginning of March, that this is a sell signal. And look what happened. Then off this one-day bounce here, this was another one. And then off this one-day bounce, here was another one. So potentially, off the first setup, you could have potentially captured 25 points. Remember, how much you make, how much you lose is up to you, because you're going to define where to place your stop. You are going to define where to exit. We simply provide you with multiple ways to make that choice. Now, the trend changed coming into April, and we started to go up. So does that mean, well, gosh, should I continue to short? No, because the market's telling you it's translating. It wants to go higher. Remember, our job is simply to listen to the market, find out what it wants to do, and then jump on board. We're not fighting the market the way we, for some reason, are always taught to do. We're always taught to buy at the bottom and sell at the top. No, we're not trying to do that. We're trying to be in sync with the market. We want to be in sync with the short term. And our short-term translator is telling us that coming into April, the market wanted to go higher in CSX. So we look at our rules. We see that there was a cluster of 3 buy signals generated and 10 points you could have made in the following week. You see, there's always opportunity around. But for some reason, we're always trying to buck it. We're always trying to do the opposite. Oh, the market's up too high. I want to sell. The market's down too low. I want to buy. Just go with the market, and you'll have a higher level of consistency. All right, PAYX. On the 4th of March, we had a 3-day bounce, 1, 2, 3, where most people thought, hey, this is the bottom here. We kind of get this bottom. This is a short-term bottom created by buyers. I want to be in sync and go long. Look at the color. All the bars were red. The only one we're looking at is this one, though. It's confirmed. We have a sell signal. The requirements are met. The stock dropped 35 points coming into the end of March, okay? If you missed that, there were 2 more generated in that sell-off. Now, PCAR, PCAR, same thing again. During the downtrend, we have 1, 2, 3 signals generated that could have potentially captured 20 points. Once the trend changed, 3 signals generated that could have potentially captured 10. You see how we are not buying all the way down the way so many traders do, and we're not selling all the way up. This is why traders lose. They're out of sync with what the market wants to do. I've often said this in my courses. The market is your best friend, but we often treat it like as if it's an enemy. We're always trying to fight it. We're always trying to decide what it should do. We're always trying to say, you will not go any higher. You will not go any lower. When in fact, we should be doing the opposite. We should, as your best friend, if it says it wants to go lower, well, great, we want to go with you. If it wants to go higher, great, we want to go with you. But for some reason, we've always been trained to do the opposite, myself included. When I first started trading 43 years ago, I did the same thing. And the only reason why I changed my way of thinking and my mindset was because I lost so much money, I didn't think I was going to be trading much longer, even though I was on the floor. My mentors taught me these things, the same things I teach you, and it sustained me. It really turned my trading around, and hopefully it will be able to do the same for you. Okay, let's recap before we go into question and answer period. Remember, this is a short-term setup, short-term process, because we apply the Pet Dee to define what the trend is. We're not waiting for the overall trend. We're only looking for the short-term trend. Then if we're a buyer, the method identifies a shallow pullback. A shallow pullback is simply a 1 to 3 day sell-off in a short-term uptrend, okay? So the bar will be colored green, and you'll have a 1 or 3 day sell-off. That's what you need. Now, conversely, if we're selling, well, the method will identify a shallow pullback. This means you'll have a 1 to 3 day bounce in a short-term downtrend. So the downtrend will be meaning that the bar is colored red, but you'll have a 1 to 3 day bounce. Now, the other two requirements are for this pattern and for this other indicator to line up. When they do, that's what generates these signals. Remember, as my mentors taught me, and as I'm trying to teach you today, and the theme of today is being out of sync with the short-term trend will often result in losing trades. I know a lot of you are saying, well, gosh, Steve, I follow the short-term trend. This indicator that I bought for $5,000 is supposed to determine the short-term trend. Or I thought the institutions defined the short-term trend. Or I thought the earnings did. Trust me, remember, I've been around for 43 years. I've traded with those things. They show no higher level of consistency than someone just trading for a couple of weeks. Trust me, I traded those things and they didn't work for me, so they're not about to start working now. How do we define the short-term trend? By applying the Pet Dee and then by using strategy number 10. So ask yourself this before you ask me questions. Do you think this new strategy could help your trading for the remainder of the year? Okay, remember, you actually don't look at this as something negative. You've been given a great gift with all of this time off, having to be at home. If you've had a job and now for the first time you're trying to learn how to trade, this is a great gift. You can take this time to study, to work with something that really works, to learn from someone who has been using this for 4 decades, and to really take your trading to the next level. This is a great opportunity to increase your odds for consistency. So let me tell you about a great offer we have for all the attendees today. We're going to offer you strategy number 10. This is our short-term trend trader. This is our new short-term strategy that applies the Pet Dee. It's a combination indicator pattern-based method. You're going to get the complete course rules, the aggressive and conservative versions. And remember, you can apply option trading to this. Now, we don't tell you, I know a lot of traders who have already become course members say, well, Steve, I thought you were going to tell me what option to buy. No, we're just sharing with you where these high probability setups are, these areas to buy or where to sell. Remember, you are in charge. If you want to buy the stock, that's great. If you want to buy a call or a put, that's great. But you're going to decide how you trade, not us. So you should have a little bit of knowledge about how to trade options first. Now, we're not going to just stop there. Because remember we talked about the PTS Primo charting platform. All the examples you saw today were generated by using our platform. We designed it specifically to teach you how to trade these short-term markets. Well, guess what? We're going to throw in a full year absolutely free. It's absolutely free. We're not going to charge you anything. Normally, this would cost thousands of dollars for all the extra advantages and all the different tools available on our platform. There's upwards of 4 decades of information and tools and knowledge I've accumulated on our platform. You're going to get all of that for free. Let me share with you some of the things you'll get. Obviously, you'll get the strategy number 10, the up and down arrows. Even though you have the course and you know what to look for, you'll get the up and down arrows to check your work, to know if you're in line, okay? You're going to get the Pet Dee. This automatically comes where it's just one click away. You click on the Pet Dee tab, and the colors automatically will change from green to red. You're also going to get our strength of trend feature. This is a tool I developed with Pro Trader Strategies, which has an uncanny ability, to tell you or to signal when a trend is just about to run out of gas or if it still has some more strength left in it. over 90 of the most prominent technical indicators, automatic exit levels. This is just one of our different exit levels that we teach you in the course that is automatically generated on the platform. But here's what I think is the most, I would say, a valuable tool on our platform. It's our signal scanner. Okay, you can, if you're not able to be in front of your computer 24/7, if you once you get back up and running again, if you like to trade daily bars, you can simply scan on a nightly basis for signals, and it's so simple. All right, I have a pet peeve with scanners because usually I've traded just about every platform or just about every scanner you can think of, and I have a pet peeve because they're so complicated. I can remember trying, I won't mention the platform, I can remember trying for hours just to get a scan of a particular market, a particular time frame, and of a particular method, and it was so complicated. So when Pro Trader Strategies and I developed this, we wanted to make it as simple as possible. And usually you can do the scanning, the nightly scanning, going through the NASDAQ, the S&P 500, currency pairs, futures, commodities in less than a minute or two. It's as simple as simply clicking on the scanning page. It's underneath your strategy number 10 tab. And then you'll see a series of green or red bars. The green bars simply mean there's a buy signal in that corresponding stock. The red ones means there's a sell signal. This process takes less than 2 minutes a night. So you'll know exactly what the setups are for the next day. For example, let's say not even a week ago, last Thursday night, which I believe was the 9th, you scanned, okay? Let's say you scanned the market. Let's say you scanned the NASDAQ for strategy number 10 signals. Well, one of the setups would have been in Netflix, okay? In fact, on the night of the 9th, it generated a buy signal. Now, according to the rules in the course, which you would have studied, you would have said, yes, that is a valid buy signal. And you could have decided either 5 minutes before the close of the 9th or the nenext morning to buy calls or maybe to buy the stock. It's up to you. Remember, you're in charge. But either way, coming into yesterday, the stock generated 45-point gain in 2 days. This is something that just happened. I go to a lot of webinars just to see what other people are teaching or so-called teaching. And a lot of the times they'll show these phenomenal signals that happen and they say, hey, this is great. See how well this works. And then you look at the date and it was about a year ago or 6 months ago. All right. I want to show you things that happened in the last week so that you know that this really works. Now, remember, it's all about consistency. I'm not going to promise you every signal works, but consistency means that you're able to recoup those losses. So hopefully you'll be able to recoup those losses with the very next setup. So this was a signal actually generated last Thursday. Okay. So here's what we're going to do. We have a great offer for you today. We're throwing in 1 full year of the platform. We're throwing in all these advantages, all these different things that are included on the platform. And we're also giving you strategy number 10, the complete course. And one other thing I didn't mention, along with the course you see on the very bottom here, is educational correspondence. You'll get my personal email. You can email me whenever you'd like. I was answering emails this morning prior to this presentation. And with any questions, if you don't understand the process or if you have a question about a particular signal or setup, you can always email me and I'll answer you as soon as possible. Okay, this is all included in the course. So let's break it down. Now, the new strategy price usually costs close to $5,000, $49.95. We're going to discount that for you today. We're going to drop that to $44.95. All right, you're going to save $500 included with that, where you're going to be able to have payment plans. So if you still can't come up with $44.95, for a small deposit, you still will be able to be up and running and have the Pet Dee, strategy number 10, along with the 12 months of the platform for a small deposit. Now, let's say you already have the Pet Dee, all right? Don't worry about it. We will only charge you usually $34.95. We'll cut that down already, and we'll only charge you $29.95. So you'll still save $500 off the usual price of the Pet Dee, and you can still apply with a payment plan. So this is a great, great offer because usually we're going to be charging you close to $5,000. You can come in for a small deposit. You can still be up and running. You don't have to come up with these prices. Remember, this includes the full strategy course, educational correspondence with yours truly, 12 months of the Pet Dee. The Pet Dee is yours for life, but that comes with 12 months of the platform. This is a great, great offer for a small deposit. You can be up and running as early as today. Remember, don't forget the PTS Primo charting platform. I designed this specifically to teach you how to trade with consistency. 12 months, absolutely free. So Here's how to take advantage of this great offer. Contact ProTrader Strategies. I developed the platform with them. They're in charge of the tech support. They're in charge of the data feeds and all that information. Also, you can contact them by calling 310-598-6677. If you want to construct or put together a payment plan, I would suggest that's probably the best way to go. For a small deposit, you can be up and running. You don't have to come up with $44.95 or $29.95. You can still be up and running. And once again, learning about strategy number 10 as early as today. Now, that link you see at the very bottom is the link that will take you to the information and to the sign-up page if you want to sign up online. If you don't want to copy and paste that link because it's not live, you can go to the chat box on the far right-hand corner, and a live link has been posted in the chat box, okay? I'm going to leave all this information up here. Remember, I stated we reserve the last portion for any questions, so if you have any questions, please feel free to go to your question and answer box right now, and then we will answer them to the best of our ability, okay? I'll give you a few chances away. Oh, someone is saying, can this work on intraday trading? Yes, it can. You can apply it to intraday trading. My only experience is because of the noise that happens with intraday trading. I mean, if you get down to small time frames, like 5 and 10 minute bars, there's a lot of noise. There's a lot of back and flow, a lot of whipsaw markets. So you have to be very diligent. I would say it works better on anything from hourly bars and above, okay? So in my own opinion, I wouldn't go less than an hourly bar. But once again, that's just from, from how I usually trade. I like to apply it for daily bars, but you can apply it to intraday, but it's just been my experience, okay? It's just a suggestion. Another question, can you use this for UK stocks? Sure, it works great on UK stocks. It works great on other indices as well. You want to work it on the DAX index. You want to do other European exchanges, other European stocks. Also, we have traders who are using this on other foreign markets, such as Canadian markets. Yes, so this can be applied to those markets as well. And it's the same rules. Nothing changes because we're looking at a different index or a different exchange, okay? Can you use this on E-minis? Yes, you can. But once again, I would not go too small in the time frame. All right. If you're looking for a small intraday trading, we have other strategies that are better suited for that. This is, I'd say, from an hourly time frame and above. Because since it's based on short term, it's so sensitive, the small time frames, you may have a tendency to really get whipsawed. So we don't want that to happen, okay? Once again, this is great. Someone's asking, can we use this for options, for option spread? Yes, you can. But remember, we're not going to decide for you what the perfect option spread is. If you have an option spread with a positive bias, meaning that you think that it has a higher ability to go for the stock to go higher, well, then simply use that on buy signals. If you have an option spread with a negative bias, meaning you think that it's more likely for the stock to be going lower, then use that for sell signals. Or if you want to just be more basic, you can buy puts or buy calls. We have many students that trade it that way. In fact, we had a student who said he was losing in options for years, just could not, but he wanted to trade options. And he used one of our methods, and and he said, you know what, I'm still not getting any closer because that method really wasn't conducive for option trading. He says, don't you have anything that's better for option? And we told him about strategy number 10. And now, for the first time, he says he's consistent trading options. And this is a real live user we have, a customer of ours, because this is a really ideal for option timing. So if you're specifically an option trader, this is a really great, a really great strategy to trade with, okay? What if I already have the platform? Well, if you already have the platform, obviously, ProTrader Strategies will work with you. I would once again contact ProTrader Strategies. In fact, once again, in closing, my suggestion is not to email them, but to simply call them. There's absolutely no obligation. They have trading consultants manning the phones right now. They would be more than happy to give you a quote. There's absolutely no obligation at all. You get more information. They'd be happy to work with you. And you can go from there and wonder if you want to take this great offer. But please, my only suggestion is don't sit on this for too long because this is only a limited time only. You may come here next week after watching this video and say to yourselves, wow, you know what? I'm convinced. I want to do this. And by that time, it's right back up to $5,000 again. They've taken the discount off. So really, if you're serious about taking your trading to the next level, contact ProTrader Strategies. They can give you a quote, and they would be more than happy to work with you. They're very flexible. And if you already have the Pet Dee, or if you already have the platform, they would be more than happy to work with you and figure out some type of offer, okay? Okay, good questions. Well, that brings us to the conclusion of today's presentation. I hope you learned a little bit about short-term strategy number 10, and most especially, I hope you learned a little bit about our philosophy, how as educators, that's our only goal, simply to educate you with high probability techniques and strategies that have really stood the test of time, okay? In conclusion, I just want to say thank you so much for taking time out of your Wednesday, for taking the time out to come to this educational presentation, but most especially, I really look forward to all of you becoming students of mine in the Strategy Number 10 course. Thank you so much for attending today. Best of luck trading, and I'll see you next time. Bye-bye.